All right, ladies and gents, I'd just like to, as we wipe everything down, remind you that there are 2 stages. So there's another stage outside in the cool circus tent-looking thing, and that there are live pitches from the 40 companies that we mentioned earlier. 40, yeah, the 40 companies we mentioned earlier. There's also a food truck outside. I am amazed at your restraint. I have never been at a conference and seen so few coffee cups. Coffee, however, is outside the door to your right. And again, turn on the right, and you'll have coffee there. So coffee pitches, there's plenty to do. We're going to be followed now. The next event, the next speaker is Mark Augustenborg Ødum from, did I get that right? Almost. God, he'll come up here and say it himself. But anyway, Mark, he's a nice guy. And, we've had a nice chat about London. That he's brief, though. But he's from Better Energy. He's their CIO. Please welcome him on stage. He'll give a talk, and then we'll follow up with some Q&A. And some follow-on questions.
Thank you.
You need a clicker.
Can you hear me on this one? Yes, you can. And I'm in need of a presentation thing.
Voilà.
There we are. Hello, everyone. Very good to be back on stage. I've heard the last bit of the formal presentation, and the question was us, who's the next green tech unicorn in Denmark? And I'm guessing you are seeing one right here. So if that's the market cap of $1 billion. It's the presentation of Better Energy, and I want to give a bit of background to the story of Better Energy and how we got there. And maybe for starters, you can just look at the picture. We're mainly known for being a solar energy company, but we are actually more a renewable energy company, a renewable energy producer. Whoops. There we go. The core thing for Better Energy is the vision to be engineers of a sustainable future. So we're basically driven by this planet's needs of having a brand new energy system which is sustainable. So basically we believe that the era of fossil fuel has come to an end, and our mission is to drive that revolution by making an impact that matters. We want to make a measurable difference to this society, and what we really believe in is, as said, a whole new energy system. And what you see here on the picture is also what we do, introducing new renewable energy by being a renewable energy company. The core to that is really to control the whole process. It's about lowering the cost of energy. So we've turned it upside down. Rather than seeing how can you get the most from every kilowatt hour that you sell, to how can you actually produce a kilowatt hour at the lowest cost possible. And we hear a lot about energy islands, we hear a lot about offshore wind, we hear a lot about such technologies in Denmark. There are also debate about new technologies, but the fact is really that the technologies are really there, and it's really about industrial scale and how to do that. In today's world, we can create energy out of solar in Denmark at approximately half the price of 1 kilowatt hours for offshore wind without a single cent in subsidies And we are also the only technology that can do so with also having a positive impact on biodiversity. So if we really work with nature, we can bring back the land to a better state than when we took it. We do that by having some core principles that we need to follow. One is that it has to be commercial, so no subsidies. We sell our power to large companies. We've entered power sales agreements with the likes of Google and Christian Hansen and Lundbeck and also Bestseller. So we need to do it in scale. Just to put a size on the scale, Europe needs to renew its energy infrastructure by going all renewable by 2050. If the assumption is that about half of that energy is going to come from solar energy, that's a massive amount of solar energy alone. And that needs to be integratable, not just in the energy grid and when the sun shines, combined with wind power. We have to do sector coupling to PTX and other things. So we have a major job ahead of us. It also has to be integratable in terms of nature. There is no point in wrecking nature. We've been through a period of industrialization, and fossil fuel has taken our economy level up quite a bit, but it's clear to everyone it's not sustainable. So when we work with new energy sources, we have to make sure that it's not just a climate crisis. We're actually also having a biodiversity crisis that we need to face. In our geographical footprint, it's tempting to just go and produce solar PV plants everywhere. And the solar industry that I started in back in 2008 as one of the first was really about chasing subsidies. So after a while, we actually call it the traveling circus. So first it went to Germany, then it went to Spain, then it went to Italy, then it went to England, then it went around the world, and what everybody was doing was the same thing, chasing subsidies, and it became sort of a really red ocean strategy. So Better Energy, we turned it around, says, okay, we are going to be focused on producing energy without any subsidies. And we honestly thought that was going to happen maybe in 2025 or something, but it started happening already in 2019. And since that, we've seen a tremendous growth. So we've also now gone and focused on some markets that other people were not interested in at all, like large-scale solar in Denmark. Most people, they thought we were mad by doing so. Not so much anymore. We also focused on Poland. And when we started doing large-scale development in Poland, people, they said to us, why are you doing that? There's no subsidies. There will never be any subsidies. And we said, exactly. And now we've gone into to Sweden as well and other markets. We are also active in other markets, but we've tried to focus on an industrial scale by industrializing the way that we do new energy, because the scale of what's required to do the energy transition, and if you want to take a serious responsibility in that, is really scale, lowest cost of possible. And the reason why we're standing here today is also talking about investment. It requires a lot of capital. I'll come back to that. Today, we are about 100 employees. We build about 100 solar PV plants. They tend to be bigger and bigger. Currently, we are building one in Holstebro, which is 200 hectares of land. That's approximately 200 football fields, so a sizable thing. That solar plant we are connecting directly to the transmission grid, and that is directly into Energinet, not going with one of the local grid companies' utilities, which is really, to our knowledge, the only time that has actually happened for solar in Northern Europe. Last year we had a revenue of just north of a billion Danish kroner. We have a project pipeline of approximately 6,000 megawatt that we are planning to build. By 2025, we plan to build at least 5 gigawatt. Just in terms of numbers, that requires capital of about 20 billion Danish kroner. So that's a lot of capital. We've had a good gross profit last year as well. And all of this, now we're talking about capital, and I want to reverse a little bit. So Better Energy was started in 2012. I started back in 2008, and I came from a background of, I was one of those investment bankers working in London, making PowerPoint presentations and raising capital and sometimes cutting costs. So just for reference, I heard from the previous presentations, like you need to stay to what you're doing. So I've been working with Absolut Vodka in Sweden. I've been merging British American Tobacco and Scandinavian Tobacco Company in Poland. The chemical company in Switzerland that polluted the Rhine when I was a child, I also worked for them. I worked with carving out cars from Ford company like Aston Martin, Land Rover, etc., etc. And it didn't feel right. So back in 2008, I decided to quit my job and get into renewable energy because I read a report about a massive need of renewable energy. So I'm the example of starting something where I had absolutely no clue of what I was doing. I just did it out of passion because that was my mit hjertesbarn. Sorry for a Danish comment on that. But fast forward, I ended up being a senior in the global solar energy industry. And the largest solar energy company in the world at the moment, called Lightsource BP, was started in my flat in Shoreditch back in 2010. That was way before Better Energy. Unfortunately, I was working on something else, so I quit being part of that team. But luckily, I'm standing here with Better Energy today and very good partners. We started in Better Energy in 2012 with me and the partners selling our pension savings, paying 60% in tax, not raising any money, taking 2 laptop computers and some folders and starting from scratch. The first investment we got in Better Energy was raising capital for 18% with a fund called Omnes in 2019, where they came with 30 million euro, and that was a valuation of approximately a little north of 1 billion Danish kroner. Since then, we've grown a lot, but our business case is more about industrial scale, and we have to be very innovative on the financing along the way. This slide here is my very favorite slide. We call it the flower, and it's basically all the core focus ingredients of what we require to make Better Energy a successful business. I want to start with the people. And we say that everybody that comes into Better Energy, there are some people that is attracted by success and financial gain. But we want people with purpose, people that is driven by making a green transition. If we come to the technology, it's really about not so much about inventing new, but being on beat with what's new and constantly working with our supply chain, because we are an industrial company. We need just-in-time deliveries, we need credit lines, we need strategic approaches to suppliers. We combine things and build things in scale. On the land, if 50% of Europe's energy demand has to come from solar energy, that requires a lot of land. We actually have a lot of land in Europe, so land is not the main shortage. The main shortage at the moment is an underinvested grid. The grid that we have, the electricity grid, simply does not cope with what's required for the future. And for several years, the only investments that has gone into the grid has been sort of what is needed for the next coming years. It is not scaled at all to what's coming and for a new energy system. Better Energy today has the largest grid team of grid engineers, planners, regulators, everything. We're simply taking it into our own control to make sure that we get the grid, enabling us to grid connect directly to the transmission grid. Last but not least, if we produce a lot of power, somebody has to buy it. And we sell what's called PPAs, power purchase agreements. So you can do that either directly with corporates, where the big US techs were the leaders in that, and they set the norm. And now it's a must-have to avoid the greenwashing and other diversions from solving the green transition. We're quite happy at the moment to say we actually have more PPA buyers than we have projects, and we have a lot of projects. So it's a very, very good development. And coming up is also energy needed for heavy transport, airlines. It's called PTX, sector coupling. All of that is coming up. So the energy demand is huge for sustainable energy. We work with something called additionality. So that whoever either finances or buys PPAs from a project is basically adding new capacity to the grid and not just sort of taking old Norwegian hydro plants and claiming credits on those, even though they were built in 1950. And then the purpose of today, capital. We need a lot of capital, and we need it at the right time. We can't have too little. We can't have too much. It can't be too expensive. And how do we do that and still remain in control? Today, we work on several levels of finance, where I'll start with what's called project debt. And that is basically like when you build a house and you get mortgage on the house. The thing with project debt is that every tick has to be right. Every document has to be squeaky clean. You can't divert from it. But then if you do your homework well, you can actually finance some of these projects with between 60 to 80% of the total cost of building a plant. And the cost of that is like mortgage rates, so below 2% all in, sometimes for 20 years. We even tried to do it 25 years with some partners. Then we have another model that we want to accumulate the power generating activity on our balance sheet. So we have entered an agreement with Industriens Pension, where we sell 50% after we complete a plant, and then we recycle the capital. But all of that is actually not enough, because during development and during construction of plants, we also need capital. And there we have managed to get it's in popular called a revolver facility, which is basically a kassekredit or credit line, where of 100 million euros, where we can use that for building until we obtain project debt. And then we have increased our equity by taking an investment in with Omnes, where the main investor in that particular fund, the anchor investor, is the European Investment Bank. Looking at my time, I had approximately 25 minutes. So coming back to what we do here, we want to drive the renewable energy transition. We want to do that by doing renewable energy commercially. We want to do it by scale, and we want to make sure that it is integratable into the power grid, what is needed, but also integratable into nature, so that we also solve or help solving another crisis, the biodiversity crisis. So that was an insight. I'm open for questions or comments.
Let's. Well, thank you very much. As a host, I'm always grateful when the people that are on stage are interesting. Rule number one, when you get up here, is be interesting. Good, because then the people out there stay involved, and the people like you don't race off to get coffee. Excellent. Wow, there are a lot of great points in that one. There are plenty of us in this room, I'm sure, who have started a startup with 2 laptops at our dining table in our apartment. Getting $1 billion in revenue, or 1 billion crowns, getting to more than 5 figures in revenue is a bit of a trick. All right, so remind us of your scale. How many of these have you put? You said you had 1 billion kroner a year in revenue?
Yes.
Not bad. There are a couple of people in the room that wouldn't mind that. Okay. And I realize that energy is an industry where everything's counted in billions, or you use big numbers in energy.
It's big numbers, yeah.
So it's a big number industry. All right, just this jump from small to big. You said you came from finance background. So as an investment banker, you were also used to big numbers. What was the key to being able to go from 2 laptops at your dining table to, if you could put and you don't have to pick one thing. What was?
I think one of the key things is that we've always tried to, sometimes when we label it popular, it's about the people that you have in the organization. So trying to stay on point and focus and get rid of the noise. Because I think one of the issues that you have especially in this area, is that there's so much to do, there's so much opportunity. So how do you actually stay on track, and how do you break that down into tasks that is actually solved without, So
focus, where did you put the focus? Because there are a million things that we can all do. There's a million things to do. Where did you decide you were going to go ahead and accept risk? Because I'm guessing you were good at the money, right? Because your partner, who is your partner?
Today we are many partners.
Yeah, but I'm back at in Shoreditch, 2008, before the last of the artists that moved out.
Rasmus Kjær, our CEO.
All right, Rasmus Kjær, and what did he do before?
But he was similar to me, but I came from sort of more finance accounting. He came from legal lawyer. So we were a combination of being able to make good agreements and
the contracts. Deals. So it's getting the deals together.
So we were both transaction experts.
Excellent.
Yes.
And transactions at scale. So this is one of the things that we often talk about with startups, is that they walk in and they ask for 1,000 crowns. And it's that old joke about, if you owe the bank 1 million crowns, you have a problem. If you owe the bank 100 million crowns or 1 billion crowns, the bank has the problem. It's not asking for enough money.
We started with relatively small projects on industrial roofs.
When you say relatively small, because also let's just put this in context. I've dealt with people that were like relatively small, and I realized they were talking about like 50 million euros, 60 million euros. So I was saying, when you say industrial products on a roof, like how big was the roof?
That was about, I think the first one was around 0.5 megawatt, so that's 500 kilowatts.
Okay, so how big? We're in an old tram car repair shop that is a couple hundred square meters.
2 of those roofs.
So 2 of these roofs. Okay, so
Yes.
it was a decent-sized project to begin with. Yeah, and so you're taking 0.5 megawatt. How many of these panels? I mean, was it,
But if we take the 200 megawatt project we're building at Holstebro,
Yeah.
that's 500,000 panels. Imagine how many containers and trucks.
Sure.
And how many piles that needs to be rammed into the ground.
Sure.
How many kilometers of cable.
So I'm guessing the mayor came out and shook your hand, and there was a little photo session and stuff. But like starting back in Shoreditch, so I mean, so what was the money amount on this? I mean, because this for me is a pretty big roof because I measure things in like my apartment.
To be very honest, I don't remember. But what we did was, in the beginning, it was about facilitating these transactions, and our core ability was to obtain the finance of the project. So making sure that all the ticks were in the boxes, making sure the money stacked up, making sure that the contracts were there, making sure that we had the right funding. And we actually went to Germany because there was where the market was the most mature.
I remember they had but they had a very advantageous support scheme
Yes,
back then. Yeah,
they did.
And so so you guys were deal makers, and so you were helping the money find the roof, so like how much of that deal were you doing yourselves at that point? Because today it sounds like you're pretty comprehensive.
But
I mean, I'm guessing you don't run around driving the poles, paying the pilings.
We also had the philosophy from our side has also been very inclusive. So we came from that part, and yes, we were named Better Energy, but we brought in another team that was expert in the construction and the development phase, and then we had the entire value chain, and then
that other team came in like
we are now.
Yeah.
I would say what's Better Energy today is really a merger between 3 companies.
So the deal making, the project, and the construction.
Yes.
So but you started with the deal making, and then how long did it take before you brought in the other bits?
That took 4 years.
4 years. Okay, so that's pretty quick.
Yeah.
All right.
So that was.
It's all possible because you had the money, right? Once you got the money, there's a lot of things that are possible, or.
Yeah, our business is a classic of the first 5 years. We started with no money, and then whatever money we made had to go into a new project,
reinvesting,
et cetera. So the first years we call it the walk in the desert.
Yeah.
So.
For sure. So you started with the deal making, and then you got the other bits on.
Yeah.
Well, sorry, the reason I'm just.
But I think the important thing is the staying true to your end goal. If you know where you're going, it all helps. The frustration and the structure, and you know also being very aware of what are you good at and what you're not so good at, and sometimes the difficult part is the stuff you're not good at, but you don't know you're not good at.
The unknown unknowns.
Yeah, and then and which is really quite. So we've learned a lot, and we've also had the ability to get very good people on board. So we have very good team of colleagues with us that master each part of their things and are very dedicated to the cause, so to speak.
And how do you find them? How do you find the great people to join the team?
But we have this saying at Better Energy doesn't recruit. Better Energy is something that you join. So actually, I think the majority of people is somebody that came knocking on our door, insisting we want to be part of this. And some other people have sort of come in for other reasons and have left again for other reasons, where they were not believers in the cause. So it's about getting that sort of balance right. Yeah.
Well, see, your personal story was, I thought, really engaging, where you came into this as a Conor Moore thing because you looked at your past, and there might have been children involved. It's like when you have to turn around to your kid and tell your kid, "Oh, well, I spent my life selling people more alcohol, or more cigarettes."
Yeah.
No, so you came from this. This is a passion thing for you. But I'm thinking, having grown up around finance, there's definitely a passion in finance for making money. But what attracted, let's say, when did this business go from being a passion for your customers, from being passion to, let's say, your investors, big in pension funds? When did they start coming in? What sold them?
The pension funds, if we take that, is like our product is very perfect for pension funds because it requires scale, it requires de-risking, and basically the full wrap. So the issue for solar has for a long time been that even though you do a relatively large solar plant, it's not big enough for institutional investors.
So for instance, when you say scale, there has to be enough. They need to be able to park enough money in it. The thing that companies are selling, let's say a lot of startups in the space, the thing they're selling isn't expensive enough for it to fit into. One of the things I explained to startups about investors is they've got money and they need to put this money somewhere to double it within 5 years if it's venture capital. And so they need to spread that risk across 10 different investments. And they can't do 100 investments because they can't track that many. And so when you're talking to these pension, let's say these institutional investors, pension funds, big pots of money. What's the smallest amount? What's the smallest ticket they're going to put out?
50 million euros.
50 million euros. All right, cool. That's a number to write down on the back of your envelope. Yeah. Okay. Cool. So 50 million euros, and you said safe. You said so. Like, what are they? So they're giving, for example, with VC, they're looking to park money with you for 5 years, and they need it to at least double.
The sort of the ecosystem of finance, like the institutional investors, would have some allocation of their funds, and they would probably allocate some money to the venture capital space, and then would choose the best performing, lowest cost venture capital fund, and then will put their money in that, and then the venture capital will deal with the investments and probably break it down in smaller bits. And but directly investments from institutional investors is only large infrastructure.
And so when they're talking to a VC, they want to see they want to see the 10x potential. Your company has to grow from 1 million to 10 million within 5 years. And with your investors, if they're giving you 50 million euros, what are they expecting in return? How much do they need to make every year?
But our investors, if we take infrastructure, this is a little bit like real estate and bridges and these kinds of things. So this is energy generating infrastructure. And that's more like a high single digit return.
So a little bit, is it anywhere a little bit under 10, from 10, 8, 9, 6?
Yeah,
but, and the good thing
depending on the country and the risk profile.
And it's also a safe investment because, let's say, if you go bankrupt, they can come along with the bailiff and say, this solar park now belongs to us, as opposed to a lot of our digital startups where there's nothing really there.
If we take the project itself, that's pretty ring-fenced. So that's financed with what's named as limited recourse or no recourse finance. Okay. So even if that project goes bankrupt, that's it. They don't have any security whatsoever in the company.
In the company, right? So it's limited to that project. So
it's limited per project, yes.
Super. Cool. There's so many fun ones in this. So when so you're talking to the institutional investors, they're looking for a safe place to park their cash. The greenwashing thing, how do you avoid the greenwashing? Like you mentioned that with your avoiding the hydroelectric dams that are already built, and so there's not, the additionality was a great point.
Yeah, but if we take this green transition, it's really about adding more capacity. So the job is to take the existing energy system and replacing it with a new energy system. And how do you incentivize that? And you can incentivize that by giving subsidies, etc. But most companies, they want to see, we want an ESG policy, we want to do it right. And until just a year ago, maybe, it was okay just to go out and buy some certificates. In Norway, they were all green, so they didn't care about the certificates. So they sold them from hydro plants, and then companies could just turn themselves green.
Yeah.
No effect whatsoever, quite the contrary, because then there was no money for real project. So it had a negative effect on the green transition. But now the awareness is there, and companies is actually using an effort to go straight out and make sure that they come with additional capacity. So it's a very nice trend. Things is happening. It's a slow-moving process, but I sense that the awareness is completely different out there. Now we also have the EU taxonomy, so every financial institution now has to be able to document how green their investments actually are. So the demand for green investments in various kinds is huge, especially compared with the availability of projects.
So final question as we wrap up is one about sort of mindset, right? I've worked with energy people, and when I think of startups and I think of the energy industry, I think sort of a lot of early stage startups are kind of out there on the edge of rock and roll, and they like to party and they're taking risks. And then I cannot think of an industry that is more opposite in that it's energy. They deal with concrete, they deal with huge time horizons, they are very risk averse. They plan in 100-year events, 1,000-year events, etc. And I was just thinking there must have been some fun switches along the way, right? And that, again, in these step changes, I can remember a friend of mine, put on a big rock concert, and he'd been used to playing gigs in cafes where you just plug the sound system into the wall. He rents Europe's biggest sound stage, biggest stage, biggest sound system, every porta potty that was available in Holland and Belgium. And on the day of the concert, they hadn't figured out where they were going to get the energy, And it turned out Belgian Electricom had figured this out, and they had a man show up with a line of 12 transformer trucks, and it turned out that was their whole profit went into the 12 transformer trucks. But, this gentleman showed up and said, excuse me, you're going to be consuming 3% of all the electricity in Belgium for this concert. Oh, we hadn't actually thought of that. I was thinking of the step changes as you go from doing 2 buildings like this to doing, 500,000 panels in Holstebro. Yeah. There are some step changes along the way that require a shift, and also internally within the organization to be able to communicate from the risk takers to the risk aversers.
But basically we're all very risk averse in the company, so it is like we can't afford risk. So it's
within scale. That scale. Let's say going from a couple of roofs to a couple of.
I'm telling you about this. Yeah. The process we've had. We had a limited amount of resources in terms of people and money and other things. So how do we go and solve the problem? And one of the things we realized, like, we have to standardize so we can do more with the same. And second, it's been very process oriented. And secondly, we had to find sort of these decision-making hubs so that we don't go and do something where we don't have the funding eventually. And last but not least, the weird thing is that we might be doing a lot of projects every year, but the amount of projects that we're doing every year is not growing that fast.
It's the size of the project.
It's the size of the individual projects which is growing, so it's becoming bigger and bigger projects, and that's why we say impact that matters. We need to get a significant impact into the energy system we operate in, and make a difference. So a lot in sustainability and renewable energy is symbolism, but you really need to think about how do we make that big leap which is required to change the energy system. So that's what we're trying to work with our limited resources, and we're trying to plan ahead. But how do we get enough resources to do the job?
It's brilliant. Listen, I love it. Process is slow is smooth and smooth is fast. Well, this has been a fascinating talk, and I hope you guys got a lot out of it, because there were a lot of, as the Danes would say, guldkorn. There were a lot of really nice takeaways from this.
Thank you, Nick.
Not least that 2 laptops on a dining table in Shoreditch. Yeah. Vesterbro. Find somewhere as hip as Vesterbro if you're looking for 2008. Anyway, but if you start out with a couple of laptops in a hip neighborhood, you really can go places. Excellent. To 1 billion crowns. You could join me. Thank you very much. That was great. All right, for those of you that don't know, there is more coffee right outside the door and to the right. Lunch will be available shortly. We'll be back.